why is everyone ringing the bell? Groww, the Bengaluru-based investment platform, filed its updated papers in September, Supreet, aiming to raise around 7,000 crores. The Lenskart IPO story has been pretty much been splashed all over the place. But here is our take on Debunked. Hello and welcome, ladies and gentlemen, to Debunked, the show where we take the buzzwords, the hype and the headlines and test if they actually hold up. My name is Sudhi and today we are actually diving into the most glamorous finish line in Indian businesses, which is the IPO. So today we are asking, what's really going on with India's IPO wave? Why are so many new age companies going public, and which ones actually deserve your money, not just your attention? And of course, joining me to decode this hype and the hard facts is Supreet Kondinya, who is a very astute tech journalist at AIM. Yes, who believes India will win the series against South Africa. But of course, that is for another debunk, Supreet. Seriously, Supreet and I actually have tried our very best to give you facts and figures through our exhaustive research. Please don't go anywhere, as we know a lot of you might have invested in the market, and this is our attempt to give you maybe a slightly different perspective. Welcome to the show, Supreet.
Thank you, Sudhi. And just starting where Sudhi left off,
Yep.
This is a slightly different perspective for all of you out there. This is not market advice, this is not investment advice, neither is me or Sudhi financial experts. But yeah, this is just a perspective, not investment advice.
Yes.
So yeah, let's begin. What do we have for the start?
For the start is, Supreet, let's actually get it growing right, which is of course the fact that we are talking about Groww. So let's start with actually the poster child of doing it right,
Fair enough.
which is Groww, the Bengaluru-based investment platform, filed its updated papers in September, Supreet,
True.
aiming to raise around 7,000 crores. That's about 1,060 crores fresh issue, and the rest through offer for sale. So, Supreet, unlike most startups that went public while actually bleeding red ink, Groww actually turned profitable in fiscal year 24
Right.
and of course strengthened that position in fiscal year 25. So here's the question, the first one to kick off Debunked. Is Groww the new gold standard for Indian IPOs? That's where I would like for you to at least set the stage for us.
Right. So I would say that it's fair to call Groww a good standard, a gold standard for these new age startups going for an IPO. Because if you can see the fact sheet out here, they opened very well. They were priced at around 95 to 100 per share. Now they're around 114 rupees on the Bombay going live today.
Sure.
And their operating revenue stood at around 3,900 crores, and their profit, so it's over 1,800 crore, and this is a true metric because we've seen how the social media sentiment sort of anchors your results on the IPO
Correct.
listing day, and
Correct.
because profit,
Very interesting
yeah,
point you
exactly.
made. Yeah, true.
Profit is something that all of us see, all of us believe, and there's always that little, we just frown upon when we see new age companies making losses and go for an IPO.
Right.
Someone's making profits, they're going for an IPO, it's great. And that's why they've done well. Of course, they have strong, fundamentals, and they have strong, reasons to have grown this much. So we'll get to all of that. So next, if we see, the key reasons, Sudhi,
Sure.
I think that Groww has really done well today and also have gotten them the profits and a good listing on the IPO day is purely the market that they cater to. Because Sudhi, you tell me, if you are the salary that you earn, I'm sure most of it is going towards your stocks, equities,
You're right.
mutual funds, and
Absolutely
digital
right.
assets.
Yeah.
Rather than some of the long-term, assets that you're
Correct.
saving for, whether it's a land or a property or any other
Or gold for that matter.
Yeah, gold, and even that is digitized nowadays.
Right.
You don't have to go to a shop
True.
and purchase gold. So, the flow of the net household savings towards equities and mutual funds has significantly grown from FY20 to FY24. So there's a 12 percentage points increase, throughout the years, and that's a key market, right? So
For sure.
Yeah, for companies like Groww to grow.
Yeah.
But
Well done, Supreet.
I'm not sure how many times you're gonna make this.
I am. I've been
but
resisting
yeah.
it.
So
No, but it's a fair one to
Exactly.
say and say it again and again.
Exactly. I think that's a huge thing. Everybody wants to invest in stock markets, partly thanks to SEBI. They've made it easy for these digital ecosystems to come up, and Groww is not the only one. Now, if you're watching the IPL, you see so many ads.
Oh, for sure.
Angel
Oh, for
One. Of course,
sure.
Zerodha is not there in the ad market, but they know they're in this
True.
huge name,
True.
the Nikhil and Nitin Kamath. So we know how these
And it's hitting at that very core. I think that's
Right.
what the point that you're trying to make.
Exactly.
It's hitting at the heartbeat of
Exactly.
investments. It's hitting at the heartbeat of the fact that how do you plan your overall future,
Exactly.
not just for yourself, for your families,
Exactly.
etc., and all of those things.
Exactly.
So it is pretty much, I would say, a gold mine.
Exactly, it is a gold mine, because if you ask our parents how they invested in stocks, it's a lot of paperwork.
Oh,
I know
yes.
this is overstated a lot, but this is a testament of a company going to public. You know how easy it has been for people to
True.
invest in stocks and all of that, and Groww is a testament of that.
Which actually brings me very quickly, I want to pick your brain on this one, Supreet. How significant is it that actually Groww built its brand with the same retail investors who might now actually buy its shares?
Exactly.
So how does it compare with, let's say, the competitors?
Exactly, it's
You
an
just named a
inception,
few.
sort of a situation. So if we get into the competitors, it's also worth understanding. So if you see the breakdown on our here, we have 1.4 billion people in India, and then you have 660 to 680 million people who have their Aadhaar and PAN linked together. So these people are the ones eligible to get
Fair.
into the equity in the mutual fund markets.
Fair.
And on that, you have 480 to 500 million active UPI users. So these are the digitally savvy and the digitally tech front users. So that's a huge market that you have for Groww here. And in that, you have 55 million mutual fund investors and 48 million stock investors. Now we have an idea of who was there in India. You asked about the competition.
Yeah.
Right now, surprisingly, even though Zerodha has been older, it's been the earlier entrant, Groww has had the more active and a larger client base over 3 months in 2025. If you look at Feb, May and August, Groww has been leading. Then you have Zerodha, then you have Angel One, some of the other players out there. And partly if you see user reviews, I think this is more of an anecdotal one. Groww offers a better user experience. You have your stocks and mutual funds all in one place, unlike other apps where you need to switch between two apps. And then you have a screener built inside it. You have a lot more features built inside it. So that's also been one of the main reasons why Groww has again grown.
Grown.
Oh my god.
we will try our level best
Right.
to not to use that
Right.
pun, which actually brings me to this. What makes Grow's market IPO stand out in a market actually filled with very hyper heavy listings? Supreet.
Right. I think it's also the business model of Groww. Right. One, they're making profit, and two, if you were to look at the future, outlook towards Groww, they probably invest more on tech, on people, on scaling their app, versus to other companies that have to make a lot of capital expenditure on, really huge stuff like manufacturing facilities or procurement or any other hardware stuff. So that, if I'm not wrong, is a huge factor.
No, it is. You're right. You're absolutely right.
So that's a huge factor for companies like Groww to have a more promising outlook. And two, their only risk factors right now is, let's say, SEBI making changes to how me and you invest in the market.
Sure.
I think that remains a huge risk factor for them. If they sort of mess around with the money that brokers earn, their numbers might go up and down. But again, it all goes back to the number of people who are active on stock markets today, and that number is only going to go up, because we all have mixed opinions on the stock market influences today.
No, for sure.
But they also drive a lot of people to jump on platforms.
Yes, you're right.
Right, and it's getting more attractive. When I was in 2017, there was no stock market education like what
The
it
way it
exists
is today. Yeah.
Right, you have you have Groww, Zerodha, and they're all doubling down on their content creation, and obviously it doubles down the influence on the more younger audience. As soon as they have a pan, just
I was actually going to come to that,
Exactly.
Supreet, because
Yeah.
I mean, with something like Groww, right? They are obviously penetrating a market which is way larger, as you said.
Yeah, exactly.
And it's only in the
it is
last 8 odd years.
Exactly. And it's still a cluttered market. by the way.
Exactly.
Yeah.
But also then there is this entire aspect that I'm sure they would have a lot of responsibility on themselves as a
Exactly.
company,
Right.
that you're dealing with probably a little, maybe how should I put it, a lesser experienced
Exactly.
people
Right.
or a
Exactly.
population,
Right.
but you're still actually prompting them to
Exactly.
get onto their platforms.
Right.
And so what do you think about that?
True, I think both Groww and Zerodha have done a wonderful job in that sense, because we've seen a lot of features in Zerodha where they nudge investors saying, look, this stock is a penny stock, just be wise before investing it. And they've actively, if you see Nitin Kamath's tweets, he's actively advocated just a cautious approach towards futures and options or day trading,
Sure.
saying that only a few people make profits. So it works as a counterintuitive effect. They want you onboard these platforms with responsibility. And even Grow's case, there were a lot of good educational content out there. They don't position themselves as experts; they get experts in the market, talk about the overall
right way to go, according to me.
and they educate them on the fundamentals. If you see many of the Grow's podcasts, so I think the sentiment among companies like Groww and Zero is very healthy. They're doing the right stuff. They're playing a fair game,
which motivates investors.
Yeah, which motivates. Apart from the ones who just see the financials or just scroll through the long DHRP document of Groww, many people who just, as they shouldn't, by the way, subscribe to the IPO on the sentiments.
Which shouldn't be the case.
Yeah, which shouldn't be the case. You got to obviously do the numbers. But if that's the case in Groww, I think they've done a good job. They've had a good sentiment, right? But again, we mentioned there are a few risk factors that exist for any company to go, whether they're going for IPO. Which is the case with every company. Yeah. But they're profitable right now, good, healthy profits.
And they've shown it consistently, as I mentioned earlier.
Yeah, exactly.
Fiscal year 24, and then they strengthened their position.
Exactly. So they've done that really well ahead of the competition. If you see, they've had 13.01 million active clients in 2025, as opposed to Zerodha, which is, I would say, 7.95, almost like, that's a huge gap.
Wow.
Yeah, and Zerodha and Angel One are going like...
Talk about leading the pack and how.
Exactly. And it also makes a huge difference. If you look at Zerodha, if you're in the tech ecosystem, it's such a popular name, yet you wonder how it's not the most
one
popular.
Leading,
yeah, exactly. And I think it's, if I'm not wrong, partly due to they've taken a slightly less aggressive approach towards marketing. They're a bootstrap company.
Fair enough.
They're making enough money, I suppose.
Fair enough.
So I think that's with Groww. Healthy listing day. They're doing well.
Finally, if we were to, talk about the Groww story, and it continuing to grow, growing onwards. I just couldn't, you got my, I had to resist myself for that long, and then of course I've unleashed myself now.
Yeah.
So Groww, according to me, is this, Supreet, I would like your final take on it. It is refreshingly grounded, but not every unicorn has 2020 vision. You know where I'm going with this
Exactly,
now.
we do.
When it actually comes to valuations.
Yes.
So the point that I'm trying to make here is, Supreet, Lenskart.
Yep. Lenskart, both of us wear Lenskart products. Doesn't mean we are promoting Lenskart investments. But
not at all.
We're just wearing
We have a clear vision on Debunked. And Supreet makes sure that it is not a blurry valuation.
Yep.
Did you like that?
Yep. Wow.
So let's actually go ahead and give you a slight context. I'm sure you already are. Everyone is aware, because the Lenskart IPO story has been, pretty much been splashed all over the place. But here is our take on Debunked. India's eyewear darling that actually just went public. Here are the figures. The IPO was priced at 382 rupees to 402 rupees respectively per share.
Right.
Raising about 7,278 crore rupees and valuing the company near 70,000 crore rupees. But the listing, let's say, not very crystal clear. You needed 2020 vision for that.
Yep, there's more.
Shares dipped as much as 11% on debut before stabilizing. A very clear reminder that even great brands can face a rough day on the markets. So, Supreet, your immediate take, I just want you to get into this. I'm asking you this. What do you think went wrong? Was it valuation fatigue? Was it timing? Or just investor caution?
Right. I think to summarize it, I think people are saying Lenskart and the company has a really myopic vision on its future outlook.
Nicely done.
I was waiting for that.
You prepped it, right?
Yeah. They started off with a lot of buzz on their IPO, but now, unfortunately, their listing day has been a mixed bag. Didn't do that badly, but as compared to what the hype was, it's done pretty poorly. It stands at 409 rupees now.
Sure.
A very humble 3.5% gain from the last 5 days since the listing day. Let's look at some numbers again. Their shares listed below the IPO price issue, as you mentioned, issued at 402, opened at around 390. And at intraday, it almost fell up to 350. That's and even though the IPO was strongly subscribed, right, 28 times of oversubscription, the public trading debut was very muted and volatile, partly because the media sentiment was pretty bad.
Yes,
right.
I agree with you.
Numbers were okay, but there were a few numbers.
But then those were also being questioned.
Exactly.
And we are going to get into that.
Yeah, we're going to get into that.
Yeah.
Numbers were picked, and obviously Twitter social media is a very unforgiving place.
Yeah.
As it should be. I mean, it's public money. So
absolutely.
as long as you look into qualified people talking about the market, that's fair enough. But the social media sentiment was quite low. People questioned this one single metric, right, about their profit in FY25. That's around 297 crores.
Correct. That was the big one. Yes,
Yeah,
you're right.
but if you have heard before, the 167 crore was a one-time accounting gain.
Which is what you explained to me.
Yeah.
And please give the example when you were explaining it to me.
Exactly.
Because I think that was very nicely done.
Exactly. So yeah, so they gained 116 crores from the on-days acquisition. So the thing with Sudhi, so let's say I try to acquire a product of yours. Let's say this is 2025.
Fair.
I pay 100 rupees to you. I agree to buy it for 200. I pay 100 rupees to you now, and I'll say the rest 100. You know what? I'm going to give it to you after a few years, depending on how much your company is valued then.
Fair enough.
All right. And then what I do is that after 5 years, I come to you and say that, you know what, your company valuation has dropped by half, your product valuation has dropped by half. I'm going to only give you 50 instead of 100. Then I can go on to say that, look, you know what, I saved 50. I committed paying 100 to you. So people say that's very sketchy metric.
Yeah.
But again, this is my understanding, might be a little skewed. But yeah, their adjusted recurring profit, it stands at 130 crore once you remove the 167 crore of the adjusted accounting profit from the own days acquisition. That was questioned a lot, and they're like, oh wait, you decided to get the profit numbers just when you were going to the IPO, and how
Because that was the sentiment. I was coming to that.
Yeah, how cool is that?
the general tone
Right.
in terms of the public, or for that matter, even the media, which was actually putting across this point, was that
True.
that as you're approaching the IPO,
Yep.
suddenly you are becoming all fragrance and flowers, and everything is perfect, and you're like a
Exactly.
meadow, and all of that.
Exactly.
But I would like you to maybe turn the lens on that one.
Oh, wow. So I think that's what I was reading an interview from one of SoftBank's spokesperson with NATV Profit today. They're saying that numbers were okay, but some numbers they've taken up and the media sentiment was turned to be largely negative. That immensely impacted the IPO. I think that's overall. It's a great case study in how the overall sentiment plays towards an IPO listing day. And also its valuation is a stretch that many people have mentioned, because if you look at the ratio of the enterprise value to the sales, it's 10x, lower the better. And even if you look at the ratio of
The EBITDA.
enterprise value to EBITDA, 68.7x. So for every like 1 rupee they're earning or something, they're spending like lots of money.
Which actually brings me to that point, Supreet. I mean, as we've established for sure, it's not like Lenskart is not profitable. It is profitable.
It is profitable, but yeah, I mean,
eyewear isn't exactly a rocket growth sector, which is something that Supreet and I were discussing, given the fact that we actually patronize the sector.
Yeah,
clearly.
Obviously.
Are public markets expecting too much, Supreet?
Right. So let's put stuff in context. So SBI Securities, in their pre-listing report, they did a breakdown of the IPO. They said that they warned us, saying that valuation of Lenskart seems to be stretched, hence listing gain is likely to be muted. So they called it. Right. However, looking at the robust business model, if you look at Lenskart business model, they have an online store, they have all of your new tech features coming in, they have AI coming in, they're really focused on what they want to do with eyewear, a lot of acquisitions. Company is well placed to encash on the fast growing domestic market and in the unprecedented eyeglasses market. So I wouldn't say the market is like skyrocketing, but there is a healthy growth in the consumption of eyewear in India. Let's get to some of the caveats with that also.
But, because I would like you to shed light on that.
Again, for the sake of it, let's look at the numbers. At FY25, the Indian eyewear industry stands at around 78,000 crores and above, and in the FY30 projected to grow upwards of 148,000 crores. So there's a good growth to it, and consumption of Indian eyewear industry is also quite growing. It's not something that's stagnated. But here's the thing: with Lenskart is not. I read somewhere it owns only 4 to 6% of the Indian market share in eyewear glasses, because it's very scattered, right? You have so many domestic, local, singular, stores across. If we just probably step out.
But the moment you just put that into context,
exactly, right.
It's
we'll have to just check that again. But I think that number is quite low, because you obviously have a clinic attached to a eye hospital.
Yeah.
You're likely gonna go there. The doctor and the they're going
to have a good relationship. But the flip side to that, is the fact that there is a huge opportunity.
There's a huge opportunity. That is true. But it comes
let's say, for example, if you go into the hamlets, the hinterland, right?
Right.
We are still actually dealing with that entire notion of the fact that you will have an eye doctor who will have probably a very rackety or a richity kind of a
Yeah,
setup,
that's
and you won't get the kind of quality, etc. But well, fair enough.
that's true. I think even in terms of quality, I think Lenskart has expanded its sub brands. You know, you have John Jacobs, you have the
Yes,
recent
yes,
days are the
yes,
budget
yes.
ones, then the acquired own days and all of that. And even if you look at the global store network, the numbers are growing, right? In FY23, the number of stores they had in metro cities in India was around 656. Now, first quarter of FY26, that number has gone to 928. So they're growing well, but
Which is fine.
yeah, but the reason they're calling the valuation a stretch is that in order to expand, you need a lot of capital expenditure because Lenskart is not purely an
Absolutely.
aggregator.
Exactly.
They need to set up their
Unlike,
own,
let's say, a Zomato or
exactly,
unlike
Zomato or even like a Groww.
Yeah.
Right? They're just a middleman offering a tech layer.
True.
And obviously all of
This
that.
is capital expenditure.
Exactly. You need to set up your own markets. Your manufacturing facilities. You look at procurements, your inventory, physical stores, while managing the tech layer that they have. Now they're getting into AI glasses. And obviously, there's obviously more. If you want to expand to your premium eyewear range, you want to acquire more companies as they have done. There's a lot of stuff they need to do in order to continue growing. So that's a word of caution that people have said, right? The growth of Lenskart directly depends upon the capex that they have. In order to grow, they need to put in a lot.
But also, there's a huge sword dangling on something like this, which you and I were talking about again earlier, which is that the way medical technology is progressing
Right.
and doing so at a breakneck speed.
Right.
What if LASIK gets
That's
a lot more safe?
That's a key risk
Or
factor.
more prestigious company.
Yeah, exactly. That's a key risk factor that they've mentioned.
Then Lenskart, Supreet, to be honest, only remains something which is very cosmetic.
Yeah, exactly. I think that's also a key risk factor that they've mentioned in their DHRP filing as well. That if medtech gets better and better, if a lot of people are still skeptical about LASIK, myself included, but if there's
so am I, to be
but if
honest,
there's more research and more work that's done in that sector where I can get more assurance that LASIK is safe, and or if it gets cheaper, or if what if another competitor comes up, finds a way to import glasses for much cheaper, does less marketing and somehow cracks the market, right? What if the making of lens becomes much cheaper? There are a lot of factors out there, factors that might benefit Lenskart too and bring new players in the market, and some of the medtech advancements that might put Lenskart's position into a good
Which actually
jeopardy.
brings me to this. So do you believe that this IPO was driven more by investor exit needs than actually growth capital?
I think it would be hard to conclude, Sudhir, that it's driven by an investor exit, because if you look at SoftBank, while they say that they're in for a long-term outlook for Lenskart, being their key investors, they only did a 1.5% of their share exit, right? Obviously, a lot of investors did exit as well, but that's the thing, as we're gonna get to this in the later section of the video. There's not a lot of money in the private market that can fuel Lenskart's needs, right? Eventually, they need to go public.
To go to the public, yeah.
So that's also one of the reasons why a lot of these new age companies are going public. We'll get to that later. So yeah, I think it's a long-term game for Lenskart.
But if you were to think about this, because we are obviously going to go into our future as far as the IPO is concerned. I want to ask you, if you were to pick it, which would it be? What would your pick be? Is this a long-term play or is this a wait and watch?
I think it's a long-term play, because it's definitely a long-term play. I think it's not just me saying it. I think there was this, SBI Securities also did mention that you're in for the long-term here. The eyeglass market is growing healthily. Lenskart is very laser-focused in terms of, just doing a lot of things in the eyewear market. And I'm sure most of us do own Lenskart, and it's going to be surely a long-haul game.
Also, the SoftBank aspect, as you had mentioned.
Yeah, obviously, it's a long-term.
So it's a long-term method.
Yeah, I think that's what the market sentiment is, and the stock hasn't fallen like really
the way
poorly. Let's see. It all depends upon how our Mr. Piyush Bansal does it.
Figures it out.
Yeah. I think the Shark Tank fame and all of that is also
is going to have some sort of a ramification.
Yes, many media sources say that it has had a positive impact, because now you see the mentality of the owner on your screen, for good and bad. Some people say some of his insights on the market, while he showed on Shark Tank, sort of played it in a negative way, and some of how he spoke and what his outlook is on capital, startups, his thesis of investments and technology also might have propagated the positive thesis or the bullish.
Still a very interesting tonality to have, right? As an investor, here is the promoter who is out there.
It's very fascinating if you think that we're a company that's going for an IPO. You have a huge media presence as the promoter of a company. It's never been there.
Never
before.
been that case.
Even the US Shark Tank market for sure, the show for sure. But in India, it's a great first time. Now, Boat is also going to go for an IPO, although they've had to navigate a few hurdles. It's really interesting to see, these people on the TV of the very stocks that you. It's pretty funny in a reality show. Who would have thought?
But it's a nice thing.
Yeah.
In a way, I mean, maybe the overall fabric is changing. So essentially, one company, as Supreet and I have discussed, has played it slow and steady. The other actually races to market. But both are part of something way bigger, which is what Supreet was hinting at earlier. And that's what we are trying to explore now on Debunked. A new age IPO wave reshaping Indian capital markets. So, Supreet, at the get-go, why is everyone ringing the bell?
Right. So I think that's a very important question to discuss. It's not just Lenskart or Groww. We have Eternal, Zomato who went live, then Swiggy has gone, Nykaa, then Meesho is going to come. PhonePe just filed its confidential DHRP. You have Meesho, I think I said, Pine Labs, and a lot of these new age companies going to the public market. So now let's discuss.
Paytm.
Yeah, Paytm obviously. So now let's look at some of the key factors. I think one of the key factors, if we were to look at in the recent times, is SEBI has made a lot of positive reforms that could positively impact and make the IPO process easier for these new age companies. So now we have a summary of that on our viewer screen. But if we were to dive deep for it, now for example, one such rule that came out in July 2025 is that your founders couldn't hold ESOPs before, right? While you were going for an IPO, meaning they had to liquidate the ESOPs and then go for an IPO. But now, according to the new rule, promoters and their group members can keep their ESOPs while they're going public as long as it has been granted 1 year before they go to an IPO. And that's a huge incentive, right? It brings down a lot of burden, a lot of calculation, exiting ESOPs. Nobody wants to do that.
True.
So that's one of the aspects out there. And if you joined a company, an entity as a part of a merger, you could only invest your shares that you received directly for the public market, not shares that you receive through convertible entities. Now that also has been removed. It says that even if shares come from converted instruments, as long as those investments were held over a year, you can invest it in, you can sell it in.
Which is again a huge fillip for the sentiment.
Exactly. And another rule said that the minimum promoter contribution, right? The promoters had to contribute 20% of their stake towards an IPO. That was the minimum.
Which is huge.
Yeah, which is huge. Now, even the new reforms is that even non-promoter investors who hold shares, from any mergers or anything, can also contribute to this 20% requirement. So these, if you see, this makes the job quite easy, right? It's like, okay, okay, there's a positive sentiment. They want us in the public market. They're doing things easily. And the other key aspect that came in September 2025 was that the minimum public offer, that was on a percentage basis, right? If you had a company, each company had to sell at least 10% of their market cap or their the shares into an IPO. And within 3 years, that had to go about 25%. Now, how is that fair? If it's a small company, 10% of it might be a reasonable amount. But if you're a huge company, what if 10% itself amounts to a huge number and you don't want to let go of that?
Usually could be the case.
Exactly. So now the new rule segregates it and categorizes it into market cap. For example, if your market cap is 50,000 to 1 lakh crore rupees, you have to sell shares to the IPO at least 1,000 crore worth rupees and at least 8% of the total and reach 25% in the next 5 years. Right? We're going to link this document in the description if people want to dive deep.
Go ahead.
Yeah. So they've categorized the minimum, percentage of shares that you need to give it away through a better restructured manner so that it incentivizes the promoters and makes it easier. And the other thing is that the anchor investors, right? You have these large scale investors who hold their shares in the company. They could only get up to 1/3 of the shares reserved for them, right? Now that limit has increased to 40%, right? So all the mutual funds and the investment companies that want to invest in the company before they go to IPO, they only had 1/3 of it, roughly around 33%. That number has also gone to 40%.
Also changed,
Right. I know there's a lot of numbers, for the audience, but the bottom line is that SEBI has made it more easier for startups new age companies to go public.
Fair point. But I'd like to ask you this at this moment, which is, are these companies listing because they're ready, Supreet, or because global investors want exits before the next funding slowdown?
I think that's the other part of it, right? Reforms are good. I mean, I'm sure SEBI has had multiple reforms throughout years that makes going public easier for anyone, right? Because obviously SEBI wants more and more companies to come on board.
Sure.
So yes, that is true. Going public or an IPO is now a hugely desired mechanism for VC exit, at least in later stage companies.
Sure.
Because unlike the United States, a lot of private money isn't flowing to Indian companies in the later stages. As you mentioned, if Lenskart had to raise, whatever crores of money that they're raising through IPO today, that couldn't have been possible through a VC market.
Yep.
Right? So they have to go public one. And it also means that the VCs they have inside, they also want to exit through an IPO. How long would they wait for the shares to get better and better, the profitability to
Logically
increase,
so
that they can sell it in their secondary market? They just want to go public. I think the the desire for investors to exit at the time of an IPO is a huge factor as to why these companies going public. And of course, Bloom Ventures in their Indus Valley report this year stated that if you see in 2021, the late stage, the investors investing in late stage companies was extremely high, and that has gone like super low in 2024. Not a lot of people want to put huge amounts of capital in the later stages of the company when they're like really mature, because their demands are very high. So you only have the public markets who would want to cater to that. So again, that's a huge factor.
So with these two things combining, Supreet, and obviously with the ease in terms of the filing aspect. Also, there was another thing which you and I were discussing earlier, which
I think that's also
the fact that companies are now allowed by SEBI to fix.
Yeah, I think that's
before
very
they go
important
public.
for new age companies, right? Because their numbers obviously aren't that clear. I won't say clear. They aren't as appealing.
Yeah.
Right. There's going to be a lot of
that's
losses.
the right word to use.
Yeah. So in 2022, when you have to file your DHRP, which includes all of the details of your company while it was operating in private, so that your investors, potential people who are going to apply for your IPO can see it, see your numbers, see your industry before applying, that can be first done confidentially within SEBI.
Which is a big one, I think.
So now if there are any lapses, if there are any dicey points, if there are any issues, they can put it to SEBI privately, then they can have some time and they can buy some time to rectify
them and then
put it out in public, so that people like me and you can see it and make these videos, right?
Which we will continue to do.
We have done that, we're going to continue doing it, and this mechanism kind of safeguards these private companies. I know that, okay, our numbers are a little wonky, we're going to sort of fix
but
it.
But that is the right approach. I think it makes sense.
Exactly, yeah. So overall, SEBI has been like really positive towards these.
Because I think psychologically also, I mean, so I'm sorry I cut you through, Supreet, but psychologically as well, I think it's a big thing for a company to take that call of, let's say, I'm going in for an IPO, I have to go public, because let's face it, you've been following a certain legacy kind of management, you've had a certain amount of method, so you're overcoming those doubts.
A lot.
Think about it.
Exactly. I think, as I mentioned in the US market, right, especially in the AI sector, people are not willing to go to private public markets. They're still in private because a lot of it, AI as an example of an experimental technology, which is still fair to call it that, because the technology is still evolving. A lot of issues here and there, a lot of conversations about a bubble. Imagine if an AI-driven, AI-first company, not a lot of them are going public these days, right? Because OpenAI just said that they're not going to go for public anytime soon. While there were reports that they're going,
but they are kind of they've restructured themselves.
I think the CFO said that they don't want to get wrapped in an IPO axle. That phrase itself sort of tells you a lot of regulatory oversight, a lot of public scrutiny. You're going to be accountable to the taxpayers' money, right? The ordinary citizens. We have all of these coming in the public markets, right? And in India, a lot of the AI market is not in a situation where they can go public. You still have a lot of D2C, fashion, and a lot of the other markets going public. But if you were to see in the United States, they don't want the amount of regulation and the oversight that's going to come in, right? That's a huge risk factor. So they want to stabilize things, make sure they have everything done properly. The scrutiny is sort of visualized and like, what, I'm fine to go for an IPO now. I think that is happening for Indian companies. Some companies have done well. Eternal is doing well. Swiggy is still in losses. Your Nykaa is
But it's of course very
profitable.
different
Yeah, different
from the United
industries.
States market.
Exactly, hugely different.
And that would probably obviously mean that we have to do another episode
Exactly, I
on
think
that.
that obviously is in the cards, viewers. So please stay tuned to AIM Network. We're going to have a detailed episode as why
Let's give the teaser.
exactly as to why companies in the United States, especially the AI companies, aren't going public.
Yeah.
Right. We're going to double click on all the factors that we mentioned. Bring up a few numbers. Databricks, they raised a Series K.
Wow.
Right. As kids, you were taught A B C D.
Yeah.
Now the fear is, okay, there's a lot of money in the US private market, but do we have enough letters?
To go.
Series K, right? We've never seen that before. So we're going to double click on all of that. But for now, the Indian IPO market looks interesting. PhonePe is going to come in. Meesho is going to come in.
Yes.
And in the non-tech sector, Studs is something that I'm really excited. The helmet brand is sort of a monopoly.
And it's been almost like one of those brands, Supreet, which has been around for ages.
Yeah, I've seen a lot of Studs, the red logo on it. Yeah, but again, so it all goes back to this, right? You look at the number of people investing in equities. It's sort of a tieback.
That's it. Yeah.
The reason why Groww is successful versus the reason why people are going to IPOs is the public market is a huge gateway for exits because a lot of people are now investing. Right, everyone, I see so many people on the metro just refreshing their zero dashboard. Although I don't want to take a look in it, but I see just everybody's in there. So yeah, it's going to be interesting times ahead.
Wonderful. Yeah. Of course, with that, we come to the end of today's episode of Debunked. Supreet, as always, has been quite incisive and brilliant. He has given us, both sides of the story. He's talked about a very interesting change which has taken place, which is encouraging a lot of the companies to go in for the IPOs.
Right.
And not all IPOs are equal. Some are actually built on profit. Others actually promise.
Yes. That's
the retail investors are now smarter, savvier, and a little harder to impress. And that, I believe, Supreet, is India's startup story, which has finally actually entered its accountability era.
Exactly.
What do you want to say to that then?
Right, it's good. Public markets are always good. I was listening to a podcast recently who said public markets are great because wealth sharing isn't just happening behind closed doors, right? Everybody is open to. I see promise, let's say in Eternal, as an example. I get to make a chunk of what they're achieving, right? It's democracy at the end of the day, right? Everyone needs access to the best companies. You're not gonna just keep seeing people do stuff in their back end. It's a huge incentive for a company to do their business well, be accountable to the public, do stuff in the best public interests. And I think that's any company that goes for an IPO is obviously has a lot of respect in people, whether they're doing good or bad.
For sure.
Because a huge scrutiny, right? For CEOs to come out of their comfort zone. So I think, just a neutral and a biased tech optimist view is
But we both actually doss our hat.
Yeah, obviously, it's a huge
initiative and an understanding.
And come on, these guys have built huge brands, right?
Absolutely.
And we talk about India as a service-first company.
And they know how to realize their dreams and they're ready to put themselves on the line.
Right, and neutral aspect, it's great for the ecosystem.
Makes
great
sense.
validation. IPOs are great validation. So let's see how stuff's
Fair enough. So as Supreet and I have, hopefully tied up all the ends for you watching. Groww showed it can be done right.
Yeah.
Lenskart reminded us that actually timing matters. And the rest, we'll see who's really in it for the long haul. This was Debunked, as I had mentioned. And as Supreet has mentioned earlier, we are going to be going into another debunk in our next episode.
As an extension of this, probably.
As an extension of this, where he will be shedding light and deep diving into how different is the US market as compared to where we stand today, which will hopefully give you a very clear overview and an understanding. And of course, thank you so much for watching Debunked. And as we always say on AIM, which is
Think AI.
Think AIM.
Right.